Nearly there. So we are back on streaming, and we're on item 7, pensions fund administration. So over to David.
Great, thanks, Chair. So yeah, I'll just go through the report here. Start as usual, just to touch on the LPPA's quarterly report and the additional appendix with the report as well, just touching on the data quality and the complaints sections. But the Q2 report showing again a strong SLA performance, but again on team we're monitoring that on a day-to-day basis on what we're feeling for the team and how things are going. Did touch on it briefly earlier, was on a forum with the LPPA with other funds as well, and happy just to give a little brief high-level update on that. Mostly funds are satisfied with LPPA's performance. Definitely a feeling across the board that they're continuing to improve and heading in the right direction. Their CEM benchmarking highlighted them as, you know, kind of average service level and slightly lower cost compared to some of their peers. And yeah, that's kind of the key takeaways from that. The report, key takeaways from that myself is the ABS delivery, annual benefit statement delivery was strong. Touched on it in previous meetings, and the retirement satisfaction, there's still work to do on there and get the ball rolling on that. Chance to improve data quality to help get us ready for pensions dashboard as well. So, you know, we're starting to think about those things. But yeah, happy to take any questions initially on those reports or the appendix.
Councillor
Wall? Just on retirement satisfaction pension, it seems to be a theme that keeps running and running. What measures are you putting in place to kind of quell that, or actually bring it back to a reasonable state of affairs? Because it seems to be every meeting we have has this as an issue.
Yeah, so just to kind of, you know, highlight, since coming in, we've had a couple of people on the team leave. We're back up to sort of full strength on Monday. So a little bit recently, it's just kind of maintaining, you know, day-to-day functionality. But now we're up to full strength, a little bit of embedding, and then, you know, going to take that time to then really drive forward those things I've discussed before, making the voice from the team a little bit more, because there's a process in place that if everything is done when it should be done, things do tick along. But even this week, you know, somebody will send through a query and be like, oh, I'm retiring in 2 weeks, I haven't heard anything. And then the kind of start of the process, our payroll system, iTrent, you can put a leave date in, and that we get a report from that. With that information, we then tell LPPA, and that happens. But if we're getting 1 week's notification before retirement date, then you can see it's really tricky to manage that and get that retirement. So it's about getting that message out that even if you got 1 month's notice, if you're thinking of retiring, you know, give 3 months notice and we can get the ball rolling with LPPA much smaller. So member engagement, employer engagement, you know, and I think it's sorting out the source and seeing what impact that has. But I've confidence that it would have a good impact.
Just just on that, is it the employee or the manager of the employee that notifies you when someone? Because I mean, I would have thought it's the employee notifies his manager he's retiring, and therefore he starts the process rather than the employee. But tell me if I'm wrong.
No, you're exactly right. So the employee will hand in their notice, but then it's the line manager's responsibility to get that update to the system. So, and it could just be here that people just don't know that, but we want to get that it is at the forefront of everyone's thinking, that, if they're having those discussions with colleagues talking about retirement, that it's like, oh, hang on a minute, let's get this ball rolling early, just to ensure, a smooth transition into retirement.
Sorry, I just jump in slightly, because that's thrown up another question in my head then. So I assume this report is about the pension administration people, whereas when you retire, which I recently did, multiple things can go wrong and delay that, and it's not necessarily their fault. So it includes things like, obviously, payroll has to give them proper information about your salary. That isn't always as fixed as it might be. So some people might have had variations over the last 10 years, for example. It could be the employee themselves that's quite late in declaring that they're retiring. And it sometimes can be the administration when they receive that information. So are we effectively wrapping up all three of those in this report, or are we actually evaluating the performance of the pension administrators? The question.
Yeah, exactly that. This is just from the pension administrator. So when they get the information, how long has it taken them to turn it around? And although, sometimes we might question some of the things they're doing, but it's fixing the source, and it's making sure that we're giving them enough notice. Otherwise, we're setting ourselves up and LPPA up to fail.
Yeah, I think that there would be work, and I think it would be worthy for us to have perhaps a conversation at some stage, David, about that, because I think that my colleague earlier said idiot's guide, and I don't like that expression, but I think we do actually need, if you wish to retire, the best way for you to do it is to give 3 months notice. Even so, contractually you only have to give 1 month's notice, and for many people they only have to give 1 month's notice. And the reasons why is because we have to do all these things, and then that makes people understand what that is. And then we need managers, what do you need to do? Because it's quite clear from all the experiences that I have, is that when I'm ringing you or your team and going, I remember said they were retiring 6 weeks ago and they still haven't heard from LPPA. What is the SLA? What is the thing? And then I discover, oh, they've not been listed as a leaver and things like that. Because the manager thinks that because ICT is obsessed with the minute you list yourself as a leaver, they're trying to get your equipment back from you as quickly as possible. But actually, you can give 3 months notice, and we need to make sure that all of our systems. So I do think there's some work to be done, because then we would reduce all this bit, because it is massively irritating that people don't know. And when we talked earlier, David, we also talked about that staff, encouraging staff to speak to the pension officers within the council and not just being constantly driven to the LPPA, which is an organisation which I know is here, but it's so far removed from people. People don't understand that they can or cannot speak to somebody local. And so, we did mention it earlier, and I do think that we need to kind of make people aware that UGI exists and that people can, approach you. They can have those conversations. But
consequences if it goes wrong.
And by planning on this and everything, it does work, and people do receive their pension the month after they retired rather than 6 months after in the worst case scenarios, because we discover that there's been some fault in the system. And we all know that, sometimes there's a bit of data entry and people don't realise that. And it's always something that I constantly say every time I talk to members who are, I don't know, doing the efficiency train association. I said, if you think you're going to get made redundant, go in and check that your data is correct, because the amount of times people go in and their date of birth is wrong and they go, well, I didn't know it was wrong. And I said, that's why you need to check and things like that, because then that skews everything or whatever and things like that. So we do need to think about ways for the staff that are in, what is the best way of doing these things, and try and improve those methods, because then we would get these, mess ups reduced right down and things if people knew.
Yeah, high on my agenda.
So we don't. I did have one other question, which is about which is mentioned on your report, which was this consultation about increasing the retirement age from 55 to 57, which I wasn't aware of. Early retirement. Well, when you can retire from, basically, yeah. And just making sure how we're going to communicate that to people, because I can see in here it says you're protected before 2021, but there's quite a long time between 2021 and 2028 when this is coming into play, isn't there? So how are we going to make sure that everybody knows that if they've been thinking about retiring at 55, maybe suddenly they can't?
Yeah, I think it's not too bad, but there are going to be people protected. But just to confirm, at the moment, this is an ongoing consultation, so it's a proposal at the moment. Nothing's confirmed, but they are proposing a protection to keep it at 55 for those members who were in the LGPS prior to the 4th of November 2021. So then only affecting those after, but nothing is fully confirmed yet. But again, it just comes back to that, yes, us being vocal, being present, getting that message out there at the time, and yeah, we'll start to investigate kind of what the best method is for that.
Okay, thank you for that. So oh, sorry.
So has pension fund panel put in a response to the consultation? And if not, why not?
So the pension fund panel necessarily hasn't, but obviously, we work very closely with the LPPA, naturally. We were in on their round table regarding their suggestion on how they wanted to respond to the consultation, and we were able to feed into that. So yeah, they've fed in a response regarding that, and the LGA will put in a response as well. Yeah.
Okay. So we're moving on to the final item, I believe.
Well, for mine, yeah, I mean, I've got a couple more bits in there, but I'm conscious of time. So happy to move on. There's nothing necessarily to highlight necessarily, but happy to touch on points 2, 3, and 5 just briefly. Okay. So point 2, the latest update on the payroll data cleanse. 1,183 pensions reviewed out of the 2009 in scope. 9 resulted in a change to iTrent payroll figures, and one of those 9 was an overpayment under the agreed limit to claim back. So ongoing work's still going on with that. We're looking for it to be complete by the end of January, so we'll be able to provide a further update next time. Pensions dashboard, LPPA were unable to meet the initial connection deadline of the 31st of October due to an issue with their IT health check. They're aiming for mid-December connection, and that will happen alongside Scottish Widows with the AVC information, which we've been in contact with. So again, I'll ensure it's a firm item on this report and provide a further update when we know more regarding pensions dashboard. Touched on the MHCLG access and protections there. So just moving on to McLeod Remedy, again, important piece, and again, keep this as a firm item as well. But LPPA continue to work through those cases and looking at any retrospective members are paid correctly. The initial analysis remains true that 10 to 15% of respective members, which includes pensioners as well, are potentially eligible for the remedy and the underpin, and about 5% of those actually will receive that automatic underpin and increase in payment. That's the report finished, unless anyone's got any questions.
No? Okay, thank you. So I think we can now move on to our final item, and that is the fund performance. Which Bridget, are you going to do? We've done a lot of that already today.
Getting back. Okay, just to update that the fund outperformed. Right, so the fund grew from 1.78 billion to 1.89 billion. So we're moving ever so close to the 2 billion mark. There was an outperformance in this quarter, so we outperformed the benchmark by about 1%, even over the 12 months as well. Equities are still on a tear, largely because of what they call the Magnificent Seven, which are the Nvidias, Microsoft, Google, Teslas of this world, which are just, just because of AI, everyone's expecting they're going to make shed loads of money from AI. So they're trading at significant levels to the earnings that they're going to get. But so everyone says they're in bubble territory, along with gold, but we're not invested in gold. So basically, the fund is in a good place. Like you heard from the actuary, we're 112% funded, but we are staying prudent to make sure that there is that sustainability buffer. So before we take the reduction in the contribution rates, we have been implementing the strategy that was agreed. We've done quite a few things, multi-asset credit. We've moved our investment to Paris aligned. Some of it to LGIM. Property, we're still looking around property. We're now underweight in property because Lothbury, that fund that was liquidated, a lot of that money is coming back. So we're going to be looking at the structure of the property, maybe topping up some of the managers that we have existing and looking for another complementary manager, either externally or through the London pool. So we're maintaining that delegation to continue to implement the strategy. Another thing that we will be doing is moving out of the corporate bonds and putting that into the index-linked gilts. Pooling 2.0, which is the mandatory pooling, is upon us, and we're preparing for that transition, which is going to take place 31st of March. There is a lot to do. A lot of consultations are coming through to us. There's one consultation on the investments. There's another consultation on the governance, which we're just going through. We have to answer that consultation by the 2nd of January. So we haven't really got very, very long to answer that consultation. Key things is that we will set our strategic asset allocation, but take the advice from the pool, and the pool will also implement that strategic asset allocation. There are still some people who feel that there should be a separation of where you're taking that advice from and who's implementing it, but that people are responding in the consultation. but we don't expect that. We don't know if there'll be any changes to that at the moment. As part of the Fit for the Future, the government did not allow 2 pools to go forward, the Brunel pool and the Access pool. So those underlying funds had to look for new homes. And at the moment, Buckinghamshire have applied to join the London CIV. So the London CIV will be inheriting that fund, which is a £4 billion fund. So the investment case from the perspective of the LCIV is quite compelling because they're going to be getting more income from that fund. There were some questions around whether, because they're a very big fund compared to all the other London funds, whether they would be directing, strategy and all that. So we're assured they're going to get 1 vote, 1 fund, 1 vote. So we will all be in the same position. On the whole, the Society of London Treasurers, which is all the directors of finance, have kind of approved that. There will be some changes in the articles and everything to admit that fund, but on the whole, that will be good for the CIV. What other update is there? I think that's really it. If I go through the, sorry about that. If I go through the recommendations, I can see if there's anything else I've missed. Unless there's any other questions, I don't think there's anything I need to update on. That is key. I've talked about governance. There are some governance changes that are coming upon us. There is going to be a statutory new position that's created, which means we have to have a pensions lead within the authority. Again, they're consulting on that. So we're looking at that, but they've said it mustn't be the director of finance, the head of paid service, or the head of legal. So we're looking at and that has to have been done by the 31st of October next year. There's a lot of things that have to be done by the 31st of October next year. We have to have a new investment strategy statement by then as well. So we're just sort of mulling our way through all the various consultations that are coming through from government at the moment. And hopefully we will get there.
On that point, I was going to ask, with the pending pooling of the funds within the CIV, are we going to get some training or guidance about what the role of this committee will be moving forward, and how we're going to interface with the new sort of
the
arrangements?
The governance draft regulations on governance has sort of covered that, but that literally came out yesterday or a couple of days ago, actually. So there is some guidance there around additional training for the committees and everybody else involved in pensions.
Mary first, then Ray.
So in the consultation, is there anything like a job description for this pension super person?
Yes, there is a bit more guidance that has come out in the consultation on.
Be interested to understand what are the expectations. And then my second question with that, is that going to be funded from the pension fund?
Yes.
You knew the answers.
I knew.
Quick question. You mentioned the kind of AI funds, holdings of all the top 7, I think you talked about. I just wonder, I mean, there's a lot of talk about that bubble bursting at some point in the near future. I wonder if resilience is there for that potential to happen. And are people diversifying out of them at the moment, or what is the market looking at in terms of moving away or carrying on with the bubble going?
I mean, from our perspective, we are overweight equities, so we need to trim some of that. So from our perspective, if we trim some of that, then we will at least crystallize some of those gains. So that from our perspective, that's what we're doing. But we've been talking about this bubble for a long time, but it just seems to be continuing. And there's apparently something very unusual that's happening in markets. It's not normal. You have gold and equities all going up at the same time, because gold is the safe haven that everyone runs to when they're a bit worried about the markets. But at the moment, both gold and equities are on a tear. But and also retail investors who don't normally go into gold are apparently piling in as well, and they tend to be herds and then quickly move out. So there are a number of dynamics in markets that are unusual at the moment. So it's hard to see. Yeah, properties are suppressed at the moment. UK properties have sort of gone down at the moment. A lot of landlords are selling because of the changes that are coming coming upstream and the requirements. So, yeah.
And what's been happening in the US and Trump tariffs has been very unusual in them, because it's been moving from 100% tariff to 0% tariff to 25% tariff. So there's been this AI boost in the US where Trump has been protectionist, but also a concern about inflation and economic growth elsewhere, which has driven, I mean, you can't link them, but has driven this unusual market perception where US has done well, but also some assets you would normally consider as defensive have been performing well. There's a lot of uncertainty, more than usual.
If that's the end of the questions, then I think that's also the end of the meeting. So thank you all very much for your contributions, and we'll be back for the next meeting.
Thank you.
Thank you.
Thank you.